Back yet again with another video. This one won't be a trading video, but more so an educational video to prepare you for the weeks coming ahead, where I think the S&P is going to go, or the market in general is going to go. So if we actually take a look at the S&P, we're going to look at it from a short-term time perspective, and then we're going to look at the 5-year chart, which I always do, because you can't analyze a chart by just you looking at one time frame. You have to get the perfect picture. You have to get a better perspective or a different point of view from looking at the actual market. So with that being said, we show that we have set our top for the market for this year currently, temporary top I would probably call it. We see a clear top in the S&P 500. This is a double top, guys. We're seeing a rejection. We're starting to see selling pressure actually come into the S&P as we continue to hit this level 4210 or 4220. The market keeps rejecting us there. Now, if we actually take a look at the 5-year chart, so let's take a look at the 5-year chart. I'm going to show you guys two possible scenarios where we could end up 500 to 1,000 points lower on the S&P. I'm going to show you guys, historically speaking, this is the most accurate way that you're actually able to take advantage of this. Now, we're not going to look at the RSI. We're not going to look at the, whatever you guys look at. We're going to look at basically just the MACD and how the chart has reacted from the MACD. So with that being said, if we have a def cross, right? As soon as we have a def cross, what happens, guys? We touch the daily moving average, the 50-day. If we have a def cross, what happens, guys? We touch the 50-day moving average. Now, I can keep repeating this. What happens? When we have a def cross, guys, we touch the 50-day moving average. Now, with that being said, we are very close to a potential def cross in the MACD. And if we look at the MACD, guys, and we look at the price target for the 50-day moving average, that is at 3,600, 3,700, just about 500 to 600 point correction on the S&P 500 once we get that clear def cross in the S&P 500. Now, at the moment, it's not clear, it's not obvious yet, because we still have buyers and selling pressure. So typically when we have buying and selling, we're going to see the stock, or not stock, but more so the index, move kind of stagnant or neutral. It's not going to go up. It's not going to go down. It's just going to trade in a very, very tight range. So like I said before, guys, we start to see the market is rejecting this level of 4220. You can call it a line in the sand. But more so, once we get that correction, we could see the market go to 3,600. Now, depending on how violent that correction is, and depending on what the news comes out with it, while we have this correction, we could see a level being breached at 3,000 for the S&P 500. Now, this has happened just twice. Depending on how bad the news is, we could break through that 200-day moving average. For this situation, it was coronavirus, right? We have a def cross in the MACD. We touched the daily moving average, the 50-day, but since it was coronavirus, guys, that was really bad. Shut down the economy basically, and that created a situation where we broke through the 200-day moving average. Now, the possible two scenarios here, we're going to either touch 3,600. Technically driven sell-off, or we could end up at 3,000 depending on if we have bad news come out in the market on top of this sell-off of this correction. So guys, expect for the S&P to hit a level of 36 to 3,700 once we have a clear obvious sign that the MACD is showing us a def cross. Now, all this takes is for the S&P to start correcting itself, maybe a 50 point to 100 point correction pretty soon in the coming weeks, and you'll start to see this MACD show a clear def cross where we start to have separation between those two lines. So with that being said, guys, it's going to be the same exact situation where we saw with Bitcoin, right? Remember what happened with Bitcoin? We had the def cross in Bitcoin, and what happened to Bitcoin? Bitcoin immediately dropped overnight around 30-40%. It was a 34% correction, and as you see right here, it is still not recovered. So with that being said, let's just take a look at the 5-year chart. Remember, we were talking about Bitcoin crashing, going to 25,000. What happened here, guys? We had this correction, and we had the MACD actually showing us that it is a def cross. And what happens with def crosses? They typically lead you to a point lower. So with that being said, guys, we could see, like I said, the Bitcoin 25, 28,000. Would probably be a buyer here depending on how the MACD reacts. Remember, I said it'll probably be a 7 to 8 month time frame event. Wasn't expecting for this thing to actually correct so fast. But with that being said, you definitely can take advantage of it. As you see, the MACD is still pointing down, so we still have a bit of a ways to go. So with that being said, guys, I want you guys to study the charts, understand the patterns, understand where the market is going. Remember, we have two possible scenarios: 3,700 on the S&P, a technically driven sell-off, or it could be bad news that gets us to 3,000. But either way, guys, the market is going lower. We have rejected 4,200 twice, and we are headed for a huge move lower. So with that being said, guys, this could be a summertime correction. So study the charts, understand the patterns, and I'll see you guys on the next profit video.